Welcome. This is Friday, Feb 23rd, and I'm giving you already my look at next week of Feb 26th, the week of Monday, Feb 26th. Tentatively, what's my plan for the week? What's the news coming up? What am I expecting the market to do for next week? And what strategies, Monday and specific strategies and expirations am I looking at? Let's jump in. So when you look at right now, obviously with the big NVIDIA news yesterday, Thursday, today is pretty quiet. I think the market was a bit exhausted, and we seem maybe possibly a little bit overbought, but who knows? So what do you look at for next week? Again, we've got some big for mainly we're range bound traders here at Sheridan Mentoring. I will look at two range bound trades today that I'm going to be looking at Monday, and also a speculative trade in VIX. But we've been quite a bit of activity. Like yesterday, we had a 2% move. So is that conducive for range-bound traders? No. I expect things to quiet down a little bit next week. We'll see. The expected move for next week, this may be a new concept for some. Next week, the expected move is about 70 points from now through next Friday. Technically, the end of the day Friday until next Friday. And the last 2 weeks, the expected move was 67 and then 65. So it's slowly been going up. What does that mean? It just means, let's just round it here. We're at 50.88, but what if we closed at 50.90 today? Wherever we close, we can say there's this one standard deviation, 68% probability to the end to next Friday. We're going to be between 50.20 on the downside, and the upside 51.60. It's about a 68% probability on that. Just to give you a little bit of context, the expected move that for today, that ends at the end of the day today, the expected move from last Friday till today was 49.38, 50.72. So we look like this would be the first week in a few that we've closed outside the expected range, mainly because of yesterday's big 2% move up in the SPX. But we'll see. I mean, we could easily, there's still some hours left in the trading day. All we got to do is drop 16 points. So that's a good basis to have. So that's information number one. Let's start with the spec trade and kind of what I'm on. So I'm going to give you 3 trades here. As far as news next week, what's the news to really pay attention to? I would look at the biggest news, I think, next week, would be Thursday morning of next week. So that would be the Thursday, Feb 29. And this is coming out in the morning. Initial jobless claims. You have the PCE, core PCE. So those all come out in the morning. So just put a little note on your calendar. We could possibly, a bit of a gap on Thursday morning, possibly. So if you want to guard against that as a range-bound player, Thursday morning is too late. You need a Wednesday night at the end of the day, kind of do a fire drill and see if your deltas are a bit unbalanced. Okay, 3 trades. I'll just show you what I'm looking at, very specific trades and the expirations, and then I'll let you go. All right, number 1, let's go to VIX. So I'm looking at VIX right now at 1408. We're starting to go down a bit as the market looks like it's stabilizing. If by the end of the day, VIX is in the 13s, if we're in the 13s, I'd be looking at a vertical debit spread, probably buying the 15s. So this would be the mechanics of it, going April 17. So I want to get a little bit of duration It's 53 days today, April 17th, but on Monday when I would put it on, April 17th, it'll be 50 days out. Gives you plenty of time. Buy a call vertical debit spread, betting sometime in the next 50 days will be trading higher than these levels in the VIX. So a April 17, 15, 18 call vertical debit spread is 70 cents. I'll be looking at that specific trade on Monday. In the SPX, first trade, I'd be looking at a kind of a first or second cousin of a calendar trade. And this is called I call it a diagonal calendar. Looks like a calendar, smells like a calendar, but just gives you a little bit of oomph on the downside. And because we've run up so much, I'd rather have a little bit more room to the downside, but it's still a range-bound trade. So the mechanics would be, let me just see this here if I want to tweak this a second. 1 second. That's fine. So I'm looking at buying the March 18, selling the March 15. So that's a mixed month spread, buying further out, selling closer in. I'm selling, I might raise this just because the market moved a little bit. I'm going to raise this to so this would be called a diagonal calendar. I'm selling a call 10 points above where the market is. And then I'm going out. Okay. I'm buying one March 18, 50, 95 call, selling one March 15, 50, 90 call. Again, this is second cousin of a calendar, looks like a calendar. But as you see, as we go down here, we're currently at 50, 90. No problemo on the downside, look good on the upside. We might adjust up here, but good range bound trade. This would be, again, just a calendar with just a little bit of hot sauce. I'm less than $1 short delta, which is fine. But this is how, with the market moving so much up here, this is how I would structure it. And then the third trade, and the March 15, that would be 18 or 21 days today. It'll be 18 days on Monday, same expiration. So, well, again, wherever the SPX is Monday, I'd be looking probably to sell the 50, sell something around at the money or a little bit higher, and then buy a strike 3 days out, 5 points higher. Now, as long as Monday comes and we haven't moved more than 1% in the afternoon, I would look for these types of trades. And then the last trade would be, I'd call this a broken wing butterfly. I'd set the short basically at the money, buy a call 70 points down, and buy a call 65 points up. This would be a 70-65 broken wing butterfly. So again, it gives you beautiful to the downside. I'm about 1.4 deltas short per contract, and I think that is fine. My theta is 27. This would be a March 28. So this would be a 34-day fly today. It'd be 31 days on Monday. And this would be a 70-65. I mean, you could do 70-65, or let me just look at a 70-60 here. I'm only less than a delta short. I like this a lot. This is a 70-65. I'm placing my short at the money. My long call, 70 points down. My other long call, 65 points up, and it's about $1,300. And this would be March 28, 34 days today, 31 days Monday. So again, what do we go over today? What to look for expected move for next week. The expected move has gone up a little bit. The last 2 weeks have been a little bit bumpy. We looked at the calendar Thursday morning for range-bound traders you want to be aware of. So you want to look at your trades Wednesday night. And then I went over speculative vertical trade in VIX if we get in the 13s today. And then I looked at I'll be looking at a March 28, 7065 butterfly on Monday. And I'll be looking at a diagonal calendar March 18, 15 on Monday also. So folks, have a great weekend. And one last thing I forgot. If you get a chance, take a look, just see what we got going on next week. We start our Manager Trades by the Greeks, Managed by the Greeks class. It's a new 4-week class starting next Wednesday at 1 p.m. Central. I think, just as crucial as the instrument panel is to a pilot, this is to a trader. To trade without a good understanding of the Greeks, I think you'll learn a lot. For the 20 whatever years I was in the pits at the CBOE, that's how we traded, managed by the Greeks. And so I'll show you what I've been teaching retail traders since I've started teaching retail traders in 2004. This is the 20th year. So I'll be sharing with you how I teach retail traders and how it could benefit you. And it's just, it's at the core of risk management. And so I think that's essential skill set to learn. And so we'll have a 4-week class. Everything will be archived. You'll be able to watch it when you'd like. And that will be starting next Wednesday. So check out our website and we'll see you next time. Thanks.